Mutual has welcomed the proposed changes to the retirement savings structure. The financial service provider says the two-pot proposal will improve long-term retirement outcomes while at the same time allowing for a portion of the retirement savings to be accessed in emergencies. Old Mutual Retirement for Reform Executive Michelle Acton is joining us now in studio for more on the two-pot retirement system. Thank you so much for making time for us this morning. Ahead of the official date, ahead of the 1st of September, we had a conversation about this. And I remember thinking about, in terms of what you guys were anticipating, around how many applications you will be receiving. To date, what are you standing at?
So at this stage, since we've opened our application process, we have just over 135,000 claims through the system. 135,000
claims. Yeah. What's the value of that, monetary value?
Monetary value at this stage is about 1.7 billion.
1.7 billion?
Yeah.
Sure, that is a lot. Did you guys experience the long queues that we've seen with the other service providers? Was there a different system in terms of your approach?
We decided to take a two-phased approach. Yeah. So instead of opening the ability to submit a claim on the 1st of September, we told our members we're doing it two phases, where the first phase at the beginning of September enabled members to go view their values, go see how much, get a quote for how much tax they would pay, get their tax affairs in order, update their details, and then when we opened the capability, then we saw our members come through and submit claims. So doing it in that two-phased approach, we've had no issues in terms of handling the volumes of claims that have come through, and our systems have been very, very stable.
Yeah, so that's the first phase, and then you introduce the second phase.
Which is ability to submit a claim.
Yeah. But also the innovation around how you're able to do that, like for instance, using WhatsApp.
Exactly. It's been amazing because we know in South Africa we are the country with the highest level of WhatsApp usage, and it makes it hugely accessible for the vast majority of South Africans. So with the idea of us using WhatsApp as our capability to submit claims, it means A, it can handle very high volumes, but B, it just makes it accessible and easy to use. It's very easy to go through that journey with a member via WhatsApp in terms of asking them through the information they need without having to just complete a paper form or online web portals, etc. So far it's done exceptionally well.
And the turnaround time in terms of processing those applications?
So it's still early days. We have commenced processing our applications. We've told our customers if you submit, it's going to take up to 30 days because it's a brand new process. We've got to go through the journey. But at this stage, we think we're comfortable that anyone who submits a claim well under the 30 days will be able to pay that claim.
But then, because there's the other one where you find that the person applies but doesn't actually qualify. Explain that for us. And within the time period of when the person applies, how quickly would they know whether or not they qualify, whether or not you're allowed to go to the next step?
Okay, so essentially the way we've built our process is you will not be able to submit a claim if you don't qualify. So part of the first phase...
Before, how do I know if I don't qualify?
Okay, because we will tell you.
Okay.
So as part of the initial phase, when you go online or on the WhatsApp, first of all, there's a couple of reasons you won't qualify. The first is you don't have a retirement product. Then from that aspect, because two-pot only applies for those who've got a retirement product. The second reason you might not qualify is you've got less than 2,000 Rand in your savings pot. And that's quite a large chunk of membership. We have about 30% of our members who have less than 2,000 Rand in their savings pot. And so they'll have to wait until their contributions enable that savings pot to get up to the 2,000. So if they have that, they will be told at that point, you do not qualify, you can't submit a claim. So part of our process of actually applying includes assessing if they qualify and the validation. Another reason is if they're in what we call a legacy retirement annuity product. So that's a very, very old RA product that they were closed many, many years ago, but they've been exempted from the two-pot system. And the last reason why someone might not qualify is because they're over 55 as at the 1st of March in a Provident Fund. And they would first need to opt into the system before they would be able to actually put in a claim. So from the process, essentially a customer will not be able to click submit if they don't qualify. So they won't. So from that aspect, we're comfortable that most members at this stage we're being able to help them with that. And that's also been great about that first phase, is we could help customers understand if they do qualify or not first before they try and submit a claim.
Then there is another one that we had discussed actually the last time, and that is looking at the tax obligations, and sometimes some people actually owing the taxmen the IT 88. It has become a buzzword since the 1st of September. Explain to us what the IT88 is.
Okay, so essentially what happens when we apply for the tax process, so you submit a claim and we go to SARS, there's essentially 3 outcomes that will come from the response. The first is SARS will come back and say, sorry, you don't qualify, your tax affairs are not in order, we will not process. And if they could decline the tax, then of course your claim will be declined. The second is they'll come back and say, right, based on your marginal tax rate, this is how much tax you must pay, and then we will deduct the tax and pay the balance over to the member. The third is if you've got outstanding tax payable to SARS. And that is what the IT88 actually refers to. It's if you owe SARS. Now, it could be for administration penalties. It could be for tax from previous years you haven't paid yet. And essentially what will happen is SARS can then deduct any outstanding debt to them from this amount before we pay it to you. So it could mean for a member that, A, we not only just deduct the marginal tax that they need to pay, but we could be deducting any outstanding tax with SARS. And the challenge we have is we don't know that. We can't tell you that in advance. We'll only find that out when we apply for a tax directive. And once we apply for a tax directive and we receive it, it's final. And that's why we've said all along to members, if you're uncertain around your tax status or if you've got outstanding debt, go online and check with SARS first before you try and submit a claim, because you could have the situation where your whole withdrawal amount is actually taken due to outstanding tax amounts.
And I think that some people weren't really aware of this particular one, in terms of, especially with the IT88. But then when you lodge a complaint, do you first lodge a complaint with Old Mutual or do you go to SARS? How does it work?
You'd need
if
to
you
go
want
to
to
SARS.
dispute.
Yeah, so if you want to dispute any tax amount, I mean, as said, we become almost a post box for SARS. So they will tell us, pay us X, we pay them that amount, and then the balance we pay to the customer. So if there's any dispute around how much tax they've paid, then actually it's SARS they need to take that. They need to go and speak to SARS about it, because that is their, and we can't help them with people's tax affairs. So that's something they'll need to take up with SARS.
Yeah, and then of course, we were touching on this one a bit earlier on. How long will it take to withdraw? How long would it take for the withdrawal to actually reflect in someone's bank account?
So that, I mean, if you look at the process one's got to go through is after the SARS amount, the SARS tax directives come back. The other piece that a lot of people don't realize is we've actually got to disinvest the money from the market. This money doesn't sit in a bank account waiting for payment. It's invested with various asset managers. And so once that money comes back, or the disinvestment's requested and it comes back, then the payment can be made to the customer. So at this stage, it's early days, and we've received the claims and we've commenced the processing. And as we get through the backlog, because of course volumes as well, it's not like, as mentioned, we've got 132,000 that need to be processed, but we are working through them, and our intention is absolutely to make sure that a member will not wait any more than 30 days.
So are you saying that even with that request for disinvestment, is it still within the 30 days?
Yes.
It's still within
Everything.
the 30
yeah.
days. Okay.
So 30 days is it's in your bank account.
Within 30 days, it will be in your bank account. Okay, lastly, what would you like to say to those rushing to withdraw their funds and without proper planning as well? Because here's the other thing, is that people were so excited that I am going to get my 30,000, which is the highest amount that you can claim, of course. I'm going to get my 30,000. And then I'm going to spend all of my money without actually having a plan around why do you want the 30,000? Why do you want to withdraw the money?
Yeah, so I think some points I'd like to make is there's this perception that I need to come and get it now or it's going to fall away, which is absolutely incorrect. This is part of your retirement funding. So if you don't access this money, it remains invested and it stays there till you reach retirement. So I think the first thing is make sure you assess whether you really need it and what you're going to use it for is the first thing. And then the second thing is remember that you're borrowing from your future self. So if you take 30,000 now, it's not 30,000 in 20 years. It's that plus all the investment return you've lost out on that money. So I think it's about a proper assessment. And if you're not sure, speak to a financial advisor first. The other thing we've picked up with the first few claims that we've been coming through in the system is people in a big rush to complete these claim forms, that not necessarily all the information that they're providing is correct. So we are also emphasizing to people that slow down if you need to complete it and you want to withdraw. Make sure you've got your details at hand, because you need things like your tax numbers and your bank account details, etc., and your annual income. You need to provide with annual income. and make sure you've got those to go through. But there's absolutely no rush. There's no cutoff. This is now the new way retirement funds work. It's the law. It's the new way. So this is not going anywhere. And so in order for it to be an appropriate retirement sort of safety net for you, this once-off allocation was done on the 1st of September. It's now going to grow. So it's not capped at 30,000 as such. Whatever's in your savings pot at any time, you can withdraw that. So rather wait until you have an absolute emergency that you need that money in order to be able to access it, than rush in now and find you have a real emergency in a few months' time and then there isn't much there.
A quick final one. Now that we have this two-pot system and you're able to make this withdrawal, have you seen whether there is, observed whether there is a change in how consumers actually look at retirement fund products? A more interest, say, okay, now at least I'm able to withdraw, unlike before.
Absolutely. I think if there's one, I mean, there's lots of positives for two-pot, but I think one of the really big ones as well is it has created an awareness on an historically unspoken about subject, i.e. retirement. Yeah. And we've got a lot of people who want to claim they're two-pot and they can't because they don't have two-pots, they don't have a retirement product. So we are definitely seeing a couple of elements, an increase in interest in our retirement funding and awareness, which is a massive positive. We've also seen a lot of people start saying they want to put more money away now, because now that I know I could access it earlier if I need to, why don't I just put more away? And so that's the sort of trend we want to start seeing, as well as people taking more interest, because before we started with two-pot, only about 50% of members actually knew how much was in their retirement fund in the first place. So I do think that this is going to create a much bigger increase in awareness and basically enabling people to upskill themselves and create more information around their retirement. Because as we know in South Africa, we don't see great retirement outcomes at the moment. And that's one of the things that two-pot is looking to improve in the long term.
Michelle, thank you so much for your time and good luck with processing all of those applications.